Hello everyone and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott wave theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the overnight rate Canada, USDCAD, and the second one is unemployment rate related to Australia, AUDUSD currency pair. So these are the currency pairs we are going to discuss. So let's start with the first one. Overnight rate in Canada, and our focus is on USD CAD currency pair. So, what is the overnight rate in Canada? The overnight rate refers to the interest rate set by the Bank of Canada, at which major financial institutions lend and borrow one-day funds among themselves. It is a key tool used to control inflation and guide overall economic growth. Changes in the overnight rate directly affect borrowing costs, consumer spending, and business investment. A higher than expected rate hike signals tighter monetary policy and can strengthen the CAD, often pushing USD CAD lower. On the other hand, a dovish tone or softer outlook may weaken the CAD and drive USD CAD higher. Now, let's take a look at the financial news event details. On March 18th at 1:45 p.m. UTC time, we got the financial news announcement. The previous number was 2.25%, forecast was 2.25%, and the actual number we got is also 2.25%. So it's unchanged. The Bank of Canada kept the overnight rate unchanged at 2.25% in line with market expectations. Both the previous and forecast values were also 2.25%, so there was no surprise in the headline figure. Despite the unchanged rate, the USD CAD moved higher after the news announcement. This suggests that Forex traders reacted more to the Bank of Canada's tone and outlook rather than the rate itself. The market interpreted the decision as slightly dovish, indicating that the central bank may not rush into further tightening. This led to weakness in the Canadian dollar and pushed USD CAD upward. Now, let me discuss market reaction analysis. Even though the rate matched expectations, the Canadian dollar came under pressure after the release. Forex traders focused on the possibility that the Bank of Canada could remain cautious in future policy decisions. This shift in expectations reduced demand for the Canadian dollar in the short term. As a result, USD-CAD moved higher as buyers stepped in and adjusted positions following the announcement. Now, the key drivers behind the move. Well, let me first show you the chart of USD-CAD currency pair. This is the daily time frame of USD-CAD currency pair. Right now, market is kind of trying to rise up over here. Now, the key drivers behind the move is the interest rate unchanged at 2.25% in line with forecast. Forex market focus shifted to Bank of Canada forward guidance. We received cautious or slightly dovish tone from the Bank of Canada. Short-term buying momentum in USD CAD, that was also the main reason. The upward move in USD CAD was mainly driven by expectations of a slower pace of future tightening. Now, the technical and sentiment considerations are USD CAD showed increased volatility after the news announcement, with price moving upward as forex traders reacted to the central bank's tone. Short-term sentiment favored US dollar buyers. The continuation of the move depends on overall US dollar strength, market risk sentiment, and upcoming economic data. The trading outlook um, and I would say the perspective about the market is the buyers turned bullish for USD CAD after the Bank of Canada decision. Short-term momentum supports US dollar strength. Further upside depends on broader US dollar trend and market sentiment. So watch out for pullbacks as traders may take profit after the initial move. The overall analysis and key takeaway is the Bank of Canada kept its overnight interest rate unchanged at 2.25%, matching market expectations. However, the market reaction was driven by the central bank's cautious tone. This led to weakness in the Canadian dollar and pushed USD CAD higher after the release. The final key takeaway is the previous number was 2.25%, forecast was 2.25%, and the actual number we got is also 2.25%. Although the interest rate remained unchanged, a slightly dovish tone from the Bank of Canada weakened the CAD and drove USD CAD upward after the news announcement. The next one is the unemployment rate in Australia. Now, what is unemployment rate in Australia? The unemployment rate measures the percentage of the Australian workforce that is without a job but actively seeking employment. It is a key indicator of labor market health and overall economic conditions. A lower than expected unemployment rate signals a stronger job market, which can support the Australian dollar and push the AUD/USD higher. On the other hand, a higher than expected rate indicates weaker labor conditions, which may weaken the AUD and drive AUD/USD lower. Now, the previous number was 4.1%, the unemployment rate. The forecast was also 4.1%, and it actually increased to 4.3%. Australia's market unemployment rate came in higher than expected at 4.3% compared to the forecast of 4.1%. This indicated softer labor market conditions that anticipated. Normally, such data would put a pressure on the Australian dollar. However, despite the weaker reading, AUD/USD moved higher after the release. Let me show you the price chart of AUD/USD currency pair. So we go over here, and the news came in on 9 on over here around this time 19th, and the AUD/USD currency pair actually moved higher. Now it's actually trying to drop over here. I can see that thing. But on that particular trading day, on March 19th, price actually moved up after the financial news release. This suggests that market may have already priced in the negative outcome or shifted focus to other factors such as overall US dollar weakness or broader market sentiment. Market reaction analysis. Well, the initial data pointed to a weaker labor market, which typically leads to selling pressure on the Australian dollar. However, the actual price action moved, shows a opposite reaction. AUD USD currency pair actually moved up. Now, as of today, it's actually trying to drop over here. But after the news release on March 19th, AUD USD tried to rise up over here and we actually got a daily bullish candlestick close over here. Forex traders likely focused on external factors, including US dollar weakness or positioning ahead of the news release. In some cases, when expectations are already negative, the currency market reacts in the opposite direction once the news is confirmed. As a result, AUD USD moved upward as buyers entered the market despite the higher unemployment rate. Now, the key drivers behind the move in Australian dollar was the unemployment rate higher than the forecast. The forecast was 4.1%, and the actual unemployment rate we got is 4.3%. Market may have already priced in weak data and possible US dollar weakness supporting the AUD USD currency pair. Short term buying momentum also sometime appear after the Forex news release. So that might be one of the reason. The move higher in AUD USD was driven more by market positioning and sentiment than the financial data itself. Now, let me discuss the technical and sentimental, and I would talk about market sentiment. Okay, the AUD USD experienced increased volatility after the release. Let me remove all of this. This is the 4-hour time frame. So, short-term sentiment favored buyers. The continuation of the move depends on US dollar direction, global risk sentiment, and upcoming economic data. Now, as of today, Aussie dollar is actually trying to drop over here. So the buyers turned bullish over here, and the short-term momentum supports further upside. But after this, we got a top, and market is as of today is actually trying to drop. So this is basically kind of a pullback, I would say, that provides some sort of a buying chance for traders. The overall analysis and key takeaway is Australia's unemployment rate rose to 4.3%, above the forecast of 4.1%, signaling softer labor market conditions. Despite this, AUD-USD moved higher, indicating that forex market sentiment and US dollar weakness played a larger role in price action than the data itself. The final key takeaway is the previous number was 4.1%, the unemployment rate. The forecast was also 4.1%, and the actual number we got is 4.3%. Although the unemployment rate came in higher than expected, AUD USD still moved upward, driven by market sentiment and possible US dollar weakness rather than the financial data alone. Now, let us take a look at previous week global market trends. I'm going to discuss about the euro dollar and US dollar Swiss franc currency pairs. So let us take a look at euro dollar first. Here is the chart of euro USD currency pair, and this is the weekly time frame. The way I see euro dollar shows us a nice break to the downside. This is a trend line break, and it's telling me that price action probably wants to go up first. So we might get a bullish leg first, and after that market is probably going to drop further in euro dollar currency pair. Next one is the US dollar Swiss franc. Finally, we got a bullish breakout over here in weekly time frame. This is a clear trend line break, so it's telling me that US dollar Swiss franc is probably going to retest this broken trend line. Okay, and then market is probably going to resume the uptrend inside US dollar Swiss franc currency pair. Next, let me talk about current week's macroeconomic events and Forex news releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. Okay, the first one is the CPI related to Australia, and my focus will be on the AUD USD currency pair. The next one is the retail sales month over month for the United Kingdom, and we will discuss the GBPUSD currency pair. So let us start with the first one. These are basically the upcoming news events for the current week. So the first one is the CPI month over month. M over M means month over month. It's just a short word and abbreviation. So what is CPI M over M in Australia? CPI month over month, also known as Consumer Price Index, month over month measures the change in the price of goods and services in Australia compared to the previous month. It is a key economic indicator of inflation and is closely watched by the Reserve Bank of Australia when making interest rate decisions. A higher than expected CPI reading signals rising inflation in the economy, which may lead to tighter monetary policy and can support the Australian dollar, often pushing AUD USD to the upside. On the other hand, a lower reading suggests weaker inflation, which may weaken the AUD and drive AUD USD lower. Now, let's take a look at even details. On March 25th at 12:30 a.m. UTC time, we're going to get this financial news release. The previous number was 0.4%. That's the CPI number. The forecast is 0.1%. The actual data obviously not yet released, but it is going to be released on March 25th. So let me talk about market context and pre-release expectations. The forecast shows a drop in inflation from 0.4% to 0.1%, indicating expectations of slower price growth in Australia. This could reflect easing inflation pressure and a more stable pricing environment. Forex traders will closely watch whether the actual data matches or deviates from the forecast. A lower inflation trend may reduce expectations of aggressive rate hikes from the Reserve Bank of Australia. At the same time, any surprise in the financial news data could quickly shift market sentiment and trigger strong movement inside AUD USD currency pair. Now, let me talk a little bit about the AUD USD upcoming move. Well, it is quite possible that AUD USD currency pair it might try to rise up. The key factors influencing price action includes actual CPI reading compared to forecast and previous value, implications for Reserve Bank of Australia monetary policy, overall US dollar strength or weakness, market positioning ahead of the release. Even a small deviation from the expectations can lead to sharp price movement as inflation data plays a major role in interest rate decisions. Now, the technical and sentiment considerations are AUD USD may experience increased volatility around the release time, around 12:30 a.m. UTC time. So, currency traders often combine economic expectations with key technical levels to plan entries and exits in the Forex market. The global risk sentiment and the direction of the US dollar will also influence how strong and sustained the move becomes after the financial news announcement. So, my bias is neutral ahead of the CPI release. Uh, And if we take a look at a price chart of AUD USD currency pair, as far as the weekly time frame, we've got this bullish breakout. In daily time frame, price action is trying to drop over here. and this is the kind of a support down over here. This is the area which market is probably trying to test over here. Let me draw this support. So this is the support area, and market is currently testing this level. Yesterday we only got a spike. This is the daily time frame of AUDUSD currency pair. So the downside risk is there if CPI comes lower than expected, and we might see some short-term volatility during the financial release time, followed by direction based on data surprise or market sentiment. Overall analysis and key takeaways is Australia CPI month over month is expected to slow to 0.1% from the previous 0.4%, signaling weaker inflation growth. This news release is important because it can influence expectations around future interest rate decisions by the Reserve Bank of Australia and drive AUD/USD movement. The final key takeaway is the previous number is 0.4%, forecast is 0.1%. The actual data is going to be released, so it's pending. If CPI comes higher than the expectations, AUD/USD may move upward. If the reading is weaker than forecast, AUD/USD may move lower depending on the market reaction. Okay, the next one is the retail sales month over month in the United Kingdom, and we're going to discuss the GBPUSD currency pair. So, what is the retail sales? M over M. Retail sales M over M measures the monthly change in the total value of sales at the retail level in the United Kingdom. It is a key financial news indicator of consumer spending, which makes up a large part of economic activity. Stronger than expected retail sales suggest higher consumer confidence and economic growth, which can support the British pound and push the GBP/USD higher. On the other hand, weaker data signals reduced spending and slower economic activity, which may weaken the British pound and drive the GBP/USD lower. Now, let me discuss about the event details. On March 27th at 7 a.m. UTC time, uh, the actual news announcement is going to happen. Let me talk about the previous number. The previous retail sales number was 1.8%. The forecast is actually negative. It's in minus 0.6%. Actual data not yet released, but it is going to be released on March 27th. So we are going to focus on GBP/USD currency pair. Now let me talk about market context and pre-release expectations. The Forex forecast, I'm also going to discuss that as well. So let's start. The forecast over here related to the retail sales shows a sharp decline from positive territory to negative territory. The previous number was 1.8%, and the expectation is now minus 0.6%, indicating expectations of reduced consumer spending in the United Kingdom. This suggests that demand may be slowing after a strong previous reading. So, currency traders will be watching closely to see if the actual financial data confirms this expected drop or surprise the forex market. A weaker reading could raise concerns about the strength of the UK economy. At the same time, any positive surprise may quickly improve sentiment towards the British pound. Now, if we take a look at a price chart of GBPUSD currency pair, you can see we got this nice bullish breakout over here. Right over here. Okay, we got this bullish breakout. Now, it's quite possible that the GBPUSD is probably going to rise up first. Well, I'm going to discuss some of the key factors that are going to influence the price action, and that includes actual retail sales, movement as retail sales directly reflect consumer activity. The technical and sentiment considerations, well, the GBP USD may see increased volatility around the financial news release time. So, currency traders often use key technical levels along with economic expectations to plan their forex trades. Global risk sentiment and the direction of the US dollar will also influence how strong and sustained the move becomes after the news announcement. Well, my bias is somewhat neutral. If we take a look at the price chart of GPUSD, it's actually trying to move up, uh, above the trend line and then falls back down. Then it's probably trying to rise back up over. So I would expect probably a sideways movement after the news release. But the downside risk is also there because over here this is the support and price action actually took out the support area. So downside risk for GBPUSD is if retail sales come in weaker than forecast. Upside potential is if the data is better than expected. So expect a short-term volatility around the financial release time, followed by direction based on the data and overall market sentiment. Overall analysis and key takeaway is UK retail sales are expected to drop to minus 0.6% from the previous 1.8%, signaling a possible slowdown in consumer spending. This financial news release is important because it reflects the strength of the UK economy and can influence expectations of future monetary policy. The final key takeaway is the previous number was 1.8% forecast minus 0.6%. The actual data is going to be released. If retail sales come stronger than expected, GBP/USD may move higher. If the data is weaker, GBP/USD may move lower depending on the forex market reaction. Next, let us take a look at current market trends. Okay, so first one is the Euro USD, and then we have the Australian dollar versus United States dollar currency pair. So first one is the euro. The way I see euro USD is probably going to rise up. We might even get a retest of this trend line over here. So we could get a deeper pullback. Okay, that's also possible somewhere up over here. And after that, market is probably going to drop. So the daily time frame, you can see market is kind of testing this trend line over here. In 4-hour chart of euro dollar currency pair, if I zoom out, this was the bearish trend channel over here. Now, as of today, we have this nice resistance area. So if price action really wants to go up in euro dollar currency pair, then wait for a bullish breakout first. If it happens, then the chances are high that euro dollar is going to rise up further. Otherwise, we might get further weakness in price action of euro USD currency pair. Next one is the Australian dollar AUD USD currency pair. This was a bullish breakout. However, in daily time frame, price action is testing the support area. Here's the support right over here. So it's quite possible that market is probably going to break below this support level in AUD USD currency pair. If it does happen, you know, market is probably going to drop even further. We could get a bounce over here as well, maybe on a short-term basis, but overall I see it's kind of a downtrend. Next one is the GBP USD currency pair, British pound versus US dollar. Regarding the GBP USD currency pair daily time frame, price action manages to break below this support area, and then it's actually trying to rise back up. So it's kind of a mixed situation over here. Next one is the spot gold XAUUSD pair. Gold is actually, managed to break below this bullish trend line. So the next stop would be the second trend line over here. So the way I see, and this is what I also mentioned in previous webinar, that gold is probably going to drop once it managed to breaks this bullish trend channel over here. Okay. Okay, let me now take a look at some questions. What is the source of fundamental news? There are different financial news websites that you can use. You can look at Yahoo Finance, you can look at Bloomberg. Okay. Second question is, what's your take with the oil price? Oil, actually, oil is probably going to, I would say, uh, increase in its value overall. Let's see. WTI. Okay. No, this is the no, this is not this one. Metals indexes. Um, think I need to check. I don't have oil over here. Let's try. No, I don't think I have the oil over here. Let's try another way. WTI. No, I do not have oil over here, but I can tell you straight that oil is most likely going to rise up further. As far as the gold is concerned, I already mentioned that this is a clear bullish trend line break over here. And this is, by the way, the weekly time frame. If I zoom out a little bit, okay, you can see that overall gold just keep going up over here. So some kind of a correction is obviously due in gold, and it's probably going to drop more in coming trading days. And then the DX is probably going to become a stronger one. As far as the oil is concerned, probably going to rise up even further. Okay, so let us discuss what you have learned today. Well, we discussed about the CPI related to Australia, and we also discussed about the retail sales related to United Kingdom. And I also talked about the euro dollar, AUDUSD currency pair, GBPUSD pair, and spot gold. These are the best assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, March 31st, 2026 at 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day and bye bye.